The reason I want to bring it up in first word is that after having a really strong run in the growth numbers and the way the stocks have done, the annual premium equivalent growth for the life insurance company has seen a slowdown in the month of September. It's contracted for the first time in around 2 years. That's the measure with which you measure the kind of growth that the insurance companies are throwing up. Now, the APE was down about 3%. Versus a 14% growth number in August 2019, LIC and the large private insurers all have seen an APE slowdown. This is the number. This is a chart that should matter. Now, just look at those numbers. Look at how almost every single month there has been a growth. For the first time in so many months, there's been a contraction. This is, of course, the last 13 months from September to September currently. But this is the first time that we've seen a contraction in almost 2 years for the insurance industry. Now, principal culprit, LIC. The September annualized premium equivalent contracted 11% versus an 18% growth in the month of August. That's the quantum of shift that has happened in LIC, which shows that it's spread across the board. Private life insurers too haven't been spared this. The APE growth moderated to 3% in September for the entire space. But look at the individual components. HDFC Life, 20% contraction in growth. ICICI Prudential, 7% slowdown in growth. SBI Life showed 11% uptick, but according to MK Global, the growth at SBI Life was driven largely by large fund flows from the group portfolio, which is a very low margin business. So they may be getting the growth numbers, but it's not coming at the best of margins. So September was a really dismal month for insurance companies, all of which are trading at super premium valuations. You never know what the reaction today could be. Now, Spark Capital in its note is putting on the reasons for the slow September. They're saying that the softening of IRRs on the non-par products, including the annuity products, was one reason. And due to the weak capital markets or the volatile capital markets, let me put it that way, there was a lower demand for ULIPs. Remember, ULIPs are the principal reason why some of these companies, including SBI Life, have been really gaining the volume numbers. But maybe the demand for ULIPs as well came off. And therefore, it's a difficult month of September, right? Because mutual fund flows haven't been the strongest. ULIP demand hasn't been the strongest. Somehow it just shows that it's probably the first month where people have just been a bit disillusioned with the capital markets in India. However, Morgan Stanley does remain a bit sanguine than most on insurance companies. Outlook is not gung-ho, but they expect the premium of the private insurers to be in the mid-teens over the next 2 years versus 9% in the preceding year. They believe the better macro situation, improving financial inclusion and stabilizing regulatory environment may help. This was as per a note that Morgan Stanley put out last month. However, this month hasn't been the greatest. What has happened though, because just one silver lining for the private insurers is that while their numbers have contracted, especially the larger ones, the smaller ones have done well, and as a result of that and result of LIC not doing well, the share of the private life insurers has actually inched up. Look at those numbers. HDFC Life now commands 9% of the market share, ICICI Prudential about 10%, Max Life 6%, SBI Life 15%, Tata AIA about 4%, which brings their combined share of all the private life insurers to about 63.37%, and LIC's has dropped to about 36.63%. So they continue to gain market share at the expense of LIC. Maybe this trend would continue. These stocks are likely to react in the session today.